May 8th, 2024. Every day there's a 90% chance that we break out of the opening 18 bar range. You can see bar 1 through bar 18. So the high of that range was here and the low was here. This is one of those rare days where we did not break out. You can see at the end of the day, we kind of tried to. We tried to rally. I thought it was actually going to happen somewhere in here, and we might try and get a little bit of a bigger bounce, but it didn't end up happening. We had a parabolic wedge on the open, which isn't all that common, but you have to keep in mind parabolic wedges are minor reversals. So, you know, point being, selling in this was probably fine, selling in here, but you had to keep in mind that it was probably an overall minor reversal. And, whenever you have a weak bear channel like this, you want to be selling, reversals down from the moving average and taking profits at the lows. You don't want to be, selling lows because it's more of a trading range than it is a bear move. You have to think of it as a leg in a trading range. So traders, when it's this kind of relatively weak and very average price action, you want to sell near the moving average. Bar 1, a bull bar, but a tail on the top. I think the context for the bulls was relatively okay. We'd had a couple of decent bull moves on the daily chart, and we're getting the first test down. And this channel up is so tight that the first reversal down is likely minor. So it's reasonable to think that this reversal attempt was going to get bought up. You can see it did on bar 1. There's a big double bottom with this buy the close rally over here. So I thought, this is one of those days where you're 30% chance that bar 1 was the low of the day. Generally, it's about a 20% chance that bar 1 is the low or the high of the day. But sometimes when the context is good, it can be as high as 30. And I thought today was one of those days where, the tail on the top didn't help. Maybe it was only 25 or something, but I thought it was a little better than average was my point. Follow through for the bulls on bar 2. We're probably, nearly always in long, but with the big gap down, it's kind of tough to consider us clearly always in long. Bar 3, you can see bulls, rather than buying the high of bar 1 or bar 2, were more interested in buying a pullback, and they bought the 50% pullback. The traders would have had to place the limit to buy one tick above the 50%, but since since we did not go one tick below the 50%, you can see, so they would have had to place a buy limit order right here in order to get filled. So a lot of traders didn't get filled and had to chase the market up. Bar 3 is an inside bar, and inside bars are high ones on lower time frames. So we have a high 1 on bar 3, but a bear bar. Probably not going to be a big bull trend day because big bull trends do not usually start with bars like bar 3. So most likely, even if we rally, we will test back to the 3 high. We did not today, but that was the most likely scenario. Big bull bar closing near its high 4, but a tail on the top. I don't really want to buy this high. An inside bar, bar 5, probably buyers below, probably sellers above. It's another high 1 for the bulls. We have 4 bull closes out of the 5 bull bars. I think we're probably getting to yesterday's low, and I thought we would probably get to yesterday's low, and I thought we would probably get to the 3 high, or at least the 4 high, or the 2 high, sorry. I didn't know if we were going to go here first or here, but if we did, end up getting a pullback first, I wanted to, trade the pullback, but we never got it. And that's oftentimes what happens in trends is you want to trade a pullback and you never end up getting the chance to. Bar 7, a doji bar, touches the target, which is yesterday's low. I think what's important to recognize here is this is a parabolic wedge on a lower time frame. We have 3 pause bars, right? We have 3, 5, and then 7, which ends up being the signal bar. This is, however, a 7-bar bull microchannel, so we have not traded below another bar yet today, but it is 3 pushes up as well. So what does that mean? It means that probably 2 legs sideways to down, but also probably a minor reversal since 7-bar bull microchannel and bull signal bar on 7. So it's essentially a parabolic wedge, and we ended up having a bigger parabolic wedge, obviously, but it's essentially a parabolic wedge on a lower time frame. So I thought that a lot of traders, wouldn't buy directly below 7. It would look to scale in, buy somewhere, lower. 8, a bear bar closing near its low, but it's the first decent bear bar we've had all day. I don't think anyone really wants to sell that. 9, kind of follow through for bears, but it's really not that good. I think if you sold below 8, 9 is not the follow through you wanted. You wanted to see a huge bear bar closing near its low. So traders are probably going to buy back shorts, which they did on 10. 10 is a high 1, and it was a wedge. 1, 2, 3, and then the high 1 triggered above 9. So I thought that we were probably going to get another leg sideways to down. I thought I didn't think that we were just going to race straight up. And I thought if we did race straight up, we'd get, more clear bull bars closing on their highs. But instead you get a bar like bar 11 with a big tail on the top, which is kind of difficult to want to buy when you're this high up in the trading range, right? So I thought, or in a potential trading range. So I wasn't sure what magnet we were headed for. Maybe yesterday's close, which is what it ended up being, or this close right here, right? Since it was consecutive bull bars. But I did not think that we were going to end up getting, much more to this rally. 12, another bull bar with a big tail on the top. I thought it could have been a parabolic wedge, 2, 7, 12, and then 13 signal bar. So I thought, I think it's kind of hard to stay long in this area. We do have this open gap, and we ended up having, you can see these tails did not overlap. So this could be considered an open gap. But I just thought it was difficult to be long. If it's not clear yet, I did miss this rally. I thought it was hard to get in on. 14, a high one for the bulls, but I'm not really sure I want to buy above a bear bar this high in what's probably going to develop into a trading range. This is not sustainable behavior. We can't go up this steeply all day, or it would end up being, I don't know, what is this is. So in the opening, it ended up being like a really huge day if we ended up doing that. So probably not going to happen. 15, a big bull bar, but it did not close above the high of bar 12. So you could have been buying the breakout points. That's one way to get long. You buy the breakout above the 2 high during 4. You buy the breakout above 7 during 11. You buy the breakout above 12 during 15. So you could have taken any of those buys if you wanted to. But I think that, I think really hard to buy above 15 when it doesn't quite close exactly how you wanted to, and you're buying really, really high. So it's really difficult. And then 17, very climactic bar, huge bull bar closing near its high. You know that this channel up was enough to probably get a second leg, but not really sure when we're going to get the second leg. Inside bar 18, do you exit below, inside bar 17? I think bulls will just get out below 17 after that big of a climax. We're probably going to test sideways down for at least a couple of hours. 18, a bear bar with the tail on the bottom. Probably sellers above 18 for at least a second leg sideways to down, but I think it's hard to sell above the bull bar when we're this clearly always in long. 19, a bear bar closing near its low. It's a double top with 16 and a parabolic wedge. I think some bears will take the short, but they know it's probably a minor reversal. And what's the target? Well, it's probably a trading range, and trading ranges generally the targets are the buy climax lows and the sell climax highs. So 15 was the most recent buy climax low. You could argue 16 was its own buy climax, so it was one of the reasonable targets. But I think if you're taking the sell, you're probably looking to get more to here and maybe scalp with like 4 points. Thought 4 points was a reasonable profit target, which would be right here. You can see those traders could have gotten 5 points down here, but I thought that 4 points made a bit more sense just because it was really tight. I suppose, did bulls make 5 points? Yeah, well, so there's an argument for trading for 5 points on 19 instead of 4 is that the bulls who bought above 15 made 5 points. So scalpers are seeing that other scalpers are making 5 points. So it was actually probably reasonable to sell below 19 and look for 5 points. I just thought 4 points was obviously the more conservative target. And with this being a parabolic wedge, the first reversal down is going to be minor. And you can see what was the other buy climax, right? It was this low. And that's where we ended up stopping today. So we went to this buy climax low, traded around it for a while. Traders were trying to decide if we were going to get a breakout to the upside or the downside. And we ended up getting one to the downside, went to the next buy climax low, oscillated around that for a bunch of bars, and then ended up getting essentially a rally. 20, follow through for the bears, but not all that great. You can't ask for too much more. There's probably going to be support on the moving average, and you're getting in towards the buy zone. Follow through 21 for the bears. It is 5 straight bear closes, so you're not buying the close of 21, but I think it's difficult to sell the close of 21 as well, unless you're using a wide stop and are willing to scale in higher. 22, a big tail on the bottom of 22. So you can see we went below the most recent buy climax low, and we ended up getting a rally during 22. 22 is a big high 2. The high one was 18. The high 2 was 22. But I wouldn't buy above 22 after this many bear bars. It's also a really tight channel down, so we might have to get a second leg. We're probably always in short on the close of 21, if not the close of 20. So I think that traders should generally be looking to get short unless we get a really deep pullback and a good-looking reversal. 23, a good bull bar, a micro double bottom with 22. Probably sellers above, but might get a small bounce here. 24, a low one short, but really not that good. And then an outside bar 25 and an inside bar 26. So an IOI pattern. I think it's an okay sell on 26, but you're not looking for a giant swing down. The move up from 1 to 9 or to 16 is going to control the remainder of the day. So you have to keep that in mind. So generally to the downside, especially, we're only, 10-ish bars removed from this really large move. So it still has a lot of influence over the market. So I think it's an okay sell on 26, but if you're going to take the sell, you need to probably be looking for a scalp. And I don't think it went as far as you want it to. Generally, if you're going to sell 26, you want 27 to be a bit bigger and then basically close somewhere in here. And then the market, basically create a wick or a tail on the bottom of the bar to get down to like 4 or 5 points. So really you want 27 to close somewhere down here, ideally below this low, but it's probably not going to happen. And then for 28 to open in the first minute or two, go fill the 5-point profit target and then probably start to bounce. But it did end up happening. You can see 27, big tail on the bottom, and then 28, double bottom, 22, big tail on the bottom of both. And it's a perfect double bottom. I think that, the buy of 28 is kind of conflicting because if you're taking the buy, you're buying in what's probably a tight trading range. And the channel down from 17 to 27 is pretty tight. So you have to realize that if you're buying above 27, we're not going to rocket straight up. Or sorry, above 28, we're not going to rocket straight up. So you're not just going to get a ton of bull bars closing near their highs, 28. We're probably going to have to trade below 28, if anything, before we start to get any sort of rally. So I thought if you're taking the buy, probably have to have a wide stop. Disappointing follow through 29, which is relatively expected to be sellers above 28, but you're not selling 29. It's too low in the trading range, and we're a few legs down. 30, disappointing follow through again. Outside up 31, and then inside bar 32. So it's another IOI. We got a lot of those today. 48, 49, 50, 62, 63, 64, but most of them weren't very tradable. I'm not selling below 32. I think, still the middle of a tight trading range. We might be always in short, but I thought that it was more likely that we got a second leg up than some sort of protracted sell-off. 33, it's essentially a wedge bottom. I'd rather wait though and see the breakout above the tight trading range. You could argue that the tight trading range was this. In hindsight, I had it highlighted as this because that's what I thought that it was more like this, since this was the most recent sell signal and we've got into a tight trading range since then. So I thought that was more of the tight trading range. And I thought that 34 was a breakout attempt above the tight trading range. Are we going to rally straight up from 34? Still probably not, but we could definitely start to go sideways to up. However, it is a breakout attempt above a tight trading range. And those are usually, in this context, it's probably pretty 50-50. Maybe slightly less because we probably were always in short, but I think it's relatively 50-50. Reversal down 35. Are you selling 35? Well, I think at the close of 35, we are always in short. So it would make sense to take the sell. But I want to see good follow through. And I have kind of problems with selling it because you're selling right smack in the middle of a tight trading range. So that's obviously an issue. 36, a bear bar closing somewhat near its low, but a big tail on top. So not as good as it could be. 37, a big tail. Again, disappointing. I think it's hard to be short here. And then a big bear bar, 38. But when 38 was near its low, you have to be thinking, if you're short, this is a trading range day. And are we going to sell straight off and go right down to the one low? Probably not. So a lot of traders end up just buying back their shorts. And I think, hold on. This is an important concept, I think, what I'm about to mention. So you know that the rally was relatively strong. And if you look at this, perfect. So this is the 5-minute bar, right? This is what those 5 minutes looked like. So after the first minute, the bar was closing right here. So we're going to go back to the 5-minute chart. So we're 1 minute into a 5-minute bar. And this bar is right here, right? And so 1 minute in, we're down here. And that's about 5 points. So you have to ask yourself, if we're probably not going to get a giant sell-off today, or do you think this bar is going to become just an absolutely massive bar? Probably not. So then what? Then what are you left with, right? There's probably support down here, and you're right here, and you have 4 minutes left in this bar. And again, this bar, 3.5 points at this point. So do you think it's going to become essentially a 13-point bar and close down here? Because if you're holding short down here, you're basically betting that this is going to become a giant bar and a really climactic sell to close, sell off, rather than just taking profits. And if it closes on its low, it's probably still going to close relatively in the range that you took profits. So you can just get back in. But that's why it's kind of hard to hold 38 because of how strong the rally was. And because if you're holding there, there's just a lot of time left in the bar for it to get bought back up. So it doesn't really make a whole ton of sense. An inside bar on 39, you could argue it's some sort of wedge, 18, 22, 38. I think that would be the wedge that I would use. But it's a trading range price action, so there's a lot of different ways to read it. This is a pretty tight channel down, so I think the upside will be relatively limited as well. I thought we might try and make a breakout towards the high of the day for a breakout attempt of the 18 bar range, but we didn't end up doing that quite in the way that I thought we would. Which, in hindsight, I probably could have thought that we would do it in a more sideways to up fashion, considering the fact that the channel down was pretty tight, even though the channel up was rather tight as well. I want to see if traders bought a 50% pullback of the whole rally. Not quite. So, but anyways, 40, a bull bar, but a big tail on the top. Not really all that good. One of my thoughts was 40 or 34 was a reasonable buy the close bar. So I thought we would get back to this price at some point later today. 41, an inside bar, a low one short, but really not that great. Bears want this to be a spike and then a pullback from the breakout, and then they're going to start some sort of move down. Bulls are thinking this is all just a bear leg in a trading range, which is, I think, the better argument. 42, kind of bad follow through. Bears wanted a really strong bar and didn't get it. And then big outside up 43, a really disappointing bar. And again, let's look at this bar, right? So how far into this bar were we when we sold off? I think I have a minute or two from the last bar highlighted, but you can see my point is that the whole sell-off really only lasted 1 minute, right? So that whole big tail essentially formed within 1 minute and was bought back up. So it's really hard to be selling all the way down here when you're only 30, 40 seconds into the bar. Because if you're doing that, you're betting this bar is pretty much going to close down here, and that's really unlikely. 44, a double top for the Bears, double top bear flag near the moving average. I think 44 is a pretty good sell. You're selling at the moving average in a pretty average bear channel, like I've mentioned. So I thought that was pretty smart. Disappointment 45, probably buyers around the 50% pullback of 43, somewhere around there. 46, closing near its low. Thought 46, you're still selling near the moving average, and it's somewhat of a second entry short, so you can definitely take it. But again, these are probably scalps because you know that there's going to be buyers at the bottom of the channel, so it's tough to want to take this sell. 48, an inside bar, a doji, disappointing. Bears wanted some sort of bear bar. 48 is the minimum for the Bears, which is a no bull close, but this is not a time where you want to see just the minimum from the Bears, considering how strong the bull channel was. So at a time where you're really bearish on the market and you see kind of just minimal follow through, but it's still follow through, then it would be okay to take that type of trade. But here, you need to see a lot from the Bears. They need to prove something to you if you're going to sell, because right now it looks like a weak channel down. So instead, we get an inside bar 48. 49, essentially an outside bar, triggers the high one above, or I guess the wedge above 48. You could argue that 22, 30, 38, 47, or, there's all sorts of 38, 43, 47. So there's all sorts of wedges here. Point being, I think that we're probably going to get some sort of bounce soon. And then an inside bar 50, but towards the bottom of an overall trading range. So we get an IOI pattern and a big breakout above it. 51. Do you buy above 51? I think you can. It's a bull surprise bar. I was kind of bothered that it didn't close on its high, which reduced the probability of a really strong bull trend. But I thought that this could be the move that led to the high of the day. 52, follow through for the bulls, but not really ideal. It looks like 51 is the spike, and we're going to make some sort of channel up rather than just a straight spike up. 53, follow through for the bulls again, but not ideal. I just want to look at something. Okay. Not really all that great. And then 54, a really strong bull bar. So essentially trying to break out. We had spike, weak channel, and bulls trying to get another spike, essentially. I think it's okay to buy above 54. It does close at the 34 close. So it means that the bulls, well, it would have been a lot better if it had closed one tick higher above the 34 close. But it means that the traders who bought this close and scaled in weren't aggressively selling when we got back. They weren't buying more. If they were, we probably would have gotten a better close here. But I think 55 would be a really telling bar. If we can get good follow through from 54 on 55, that'll show that bulls are aggressively buying and traders think we're going to the magnet. And 55 instead is a disappointing doji bar. We traded below it and then got a reversal up 56. So I think okay to be long, okay to be buying above 56. Probably stop below 56 is fine at this point. If we're going to rally to the high of the day, we should just go. 57 is not really ideal follow through, and then you get another disappointing bar 58. Do you exit below 58? You probably don't have to, but it could be a second leg trap. And if your thesis is this is really bullish and we're going to get to the high of the day, then why isn't it that bullish? Why aren't we getting really strong bull bars closing near their highs? So I thought relatively disappointing bar in 58. Some traders exit, causing 59. Other traders hold, stop below 56. And then we get a big reversal up on 60, closing somewhat near its high. It could be 3 pushes up. 1, 2, 3, and we're kind of trying to get a breakout above this channel, which is generally like 50-50 chance. I thought there was a reasonable enough chance we ended up getting the rally on 61 towards the high of the day, but instead we got a disappointing doji bar 60 or 61. Double top 58, 61. Are you selling below 61? No, it's a doji bar. And disappointing follow through 52 or 62. An outside down bar 63. To me, this just looks like a tight trading range. Bulls want, we have a triangle forming here, right? What do bulls want? Bulls want the triangle to, probably go on for another bar or two and then get a rally and see this as essentially, some sort of 1 leg, 2 leg, maybe a 3rd leg pullback in what's going to be ultimately the rally to the high of the day. Bears want to see this triangle as a final flag for the bulls and get a reversal down, but hard to do when you have this rally from 51 to 57. I thought the bulls had a credible argument, but they needed to get the rally, and instead, they just weren't able to get it. 62 is a high 1 and a breakout pullback from the breakout above 50, 58, but it's a bear bar. So how many big bull trends start with bear bars? Suppose you could say that this one did here today, but I thought in general, disappointing that we got this bear bar. And that's why there were sellers above 63 outside bar. An inside bar 64, bulls really wanted it to close on its high for an IOI and a potential swing buy, but instead, disappointing. 65, a bear bar, but with a tail. Follow through for the bears on 66, but again, lots of tails, probably buyers below 60, scaling in lower. And then 67, a big bear bar with a big tail. I thought that we were just trying to get back to the 49 high. It was interesting to me that we did not quite get there. 67, a big tail. You can see 1, 2, 3, some sort of parabolic wedge. And then 68, a bull bar, but not really great. Bulls, maybe some sort of big double bottom and a wedge pullback of some kind, 1, 2, 3, 1, 2, 3. But I don't want to buy above 68. There's a lot of risk because you probably have to put a stop below 67, and there's a big tail on the top. So not as good as it could be, I don't think, for the bulls. 69, doji follow through bar, and then a bull surprise bar 70 and 71. I suppose you could say since this was a wedge of some kind, you probably need 2 legs sideways to up. But I just don't really want to buy those. 70, 71, good follow through for the bulls and a bear bar closing near its low 72. Again, a failed breakout above the wedge attempt to 61. 73 trades up. It doesn't let the trade. The bulls who bought the close of 72 are buying because they know bulls will exit below here and they want to instead get a rally to this high. But that doesn't end up happening, obviously. And then we get 74 an inside bar. So essentially another IOI. Bulls will exit below 74. And oftentimes before the market goes to a magnet, it'll do this and trap traders out and then rally up to the magnet and force everyone to get back in higher, which is what ultimately drives the market to the magnet. But you can see today we did not end up going to it and we just failed near the top of it. So one of those rare days where we did not touch the high. For stop orders today, for me, I didn't think there was very many good ones. 15 maybe. It's always in long. It's bull bar closing near its high, so it's fine. But I just thought didn't quite break out enough and too much of a tail. 19 was fine. I don't know. I thought you could buy 28, but you have to have a wide stop and be willing to buy more below. But once you see 37 or 35, I would just get out. So, and 34 kind of tough. I think that might just be the top of a trading range. 35, 36 probably okay, but tough in the middle of a tight trading range. 44 is good. 46 is good. Maybe 51, definitely 54 by the close. Probably 56 is fine. Daily chart. You can see we had a strong rally and we got the first pullback. It's probably a minor reversal, so we might have to trade above here. But ask yourself, is this a good high 1? Do you really want to buy above this high 1? Probably not. So we might end up getting a second leg sideways down. However, it is still clearly always in long on the daily chart. So that's good for the bulls. On the weekly chart, tomorrow is Thursday. So we're getting close towards the end of the week. Bulls wanted this to close on its high, and they're trying to get back to the low of March 25th. since they're bulls who pop low there, they're scaling in lower. Again, expecting this to be a trading range. All right, that's today.